right. We continue now with our Property Players series, a look at some of the most important players in real estate today. That applies to my next guest. My next guest this morning sits literally atop an empire. The Empire State Building is his best-known investment to everybody, but his portfolio includes several commercial and residential properties in many markets. Anthony Malkin is the president of Malkin Properties and also Malkin Holdings. Tony, great to have you back.
Thank you very much.
Last time you were on, we were talking politics. We'll talk about real estate now.
Terrific.
Okay, the biggest news so far. I think I heard something like you had leased, 500,000 square feet of space to Li & Fung,
yes,
a Hong Kong company.
We just closed that transaction at the beginning of the year.
Okay, and that's a sign of what?
Well, first of all, it's the largest lease in New York City in about 24 months, and I think it's a sign for our portfolio, which is all pre-war property, which has been repurposed into trophy condition, that there's a real demand for large blocks of space in New York City, and specific that's been repurposed, more energy efficient, at a significant bargain to new construction.
Well, what sealed the deal for them?
You know, there were a lot of interesting factors. We had the space, we had the price point. There's also a lot of inducement on their part by the fact that the Empire State Building is the leader in energy efficiency in the existing built environment.
Right, you retrofitted the whole building,
That's
right, for energy efficiency.
So we can assure tenants in our property that they're going to be consuming less electricity and controlling their exposure to utility costs. 3 costs of tenancy: salary, rent, and utilities. And the only one you can't control is utility.
Talk to me about price point.
Well, you know, price point, our portfolio in New York today is leasing from the low 40s to the high 50s. And that is about 10 million square feet in the New York Metropolitan-Area, 8 million in New York City. So what we're really taking is buildings which are all pre-war. They're all built for other uses, and we're consolidating, cleaning them up, new hallways, new elevators, new lobbies, new bathrooms, and we're finding that top credit tenants are looking for value, and they're looking for solid blocks of space, and they're finding our offering very appealing.
But compare for me the price point this time around, sealing a deal like that, than let's say 2 or 3 years ago, 2 years ago even at the peak of the markets.
Well, you know, our portfolio is a little different. I got control of it in full in 2006 after a pretty lengthy litigation, and we've been investing $1.5 billion in upgrading it. But I'd say the market, generally speaking, is down about 20 to 25% from its peak. That's up from the bottom.
The prices, 20 to 25%.
That's correct. And I'd say that in the Class A trophy properties, you're seeing rents pop above $100 a foot again. Certainly for smaller spaces, for boutique, smaller users.
And that's back into 2007, 2006 levels?
It's, again, I'd say probably, you know, for the absolute peak, you're probably still 20, 30% below. The big question is large blocks of space in brand new buildings. I think those are much lower. Smaller spaces are higher priced, but the larger blocks in newer buildings are much lower.
Because there's just not that demand in that area?
I think they've got alternatives. They can look at the Empire State Building, where we didn't used to have 500,000 square foot blocks, where we're creating them, and they can say, wow, I don't need a 60,000 square foot floor plate without a column. I'll take columns, and I'll take 50% less rent.
I see. Tony, you've also said that financing is getting easier.
Yes.
What do you mean by that?
You know, in the middle of 2010, around June, we saw a pickup in a couple of things. Number one, life companies and banks were more motivated to lend, and the CMBS market has perked up again. So while
mortgage-backed securities market.
That's correct. So while the loan-to-values may be lower in the 60 to 65% range, there's a lot more available, and there's a lot more mezzanine available, a lot more subordinate financing that bridges the gap. And there are a lot of transactions being done today with a lot of equity being deployed by new players.
Like who, for instance?
Well, there are a lot of private equity funds, and there are REITs, and there are overseas buyers. So the combination of these factors means that, look, with 5-year money in the low to mid 5s and with 10-year money in the low to mid 6s, when you're buying property today at a 5 to 6 cap or lower, when you put your debt on, there's really nothing there but a hope certificate when you put in a lot of money to close that deal. So while pricing is down still, again, about 30% below the peaks of 2007 on transactions, the debt is available. There's debt available for development as well.
Right, exactly. As long as you've got that financing, then that it's okay that you haven't caught up on the price part of it.
And we've got 2 different worlds, by the way. You've got the Cinderella cities: New York, Boston, LA, San Francisco, perhaps Chicago, Washington, D.C., certainly. Then you've got the rest of the United States, which is not receiving the same appeal, where The rates, if you can get them for borrowing, are much higher.
Right. You've mentioned before last time you were on that D.C. and New York are kind of the real, the only real strong markets going on right now. Tony, before I let you go, though, last time you were on, you were saying essentially that you can't get your phone calls returned in Washington, right, when it comes to energy efficiency. Now that all this has passed after the elections, are you finding it any easier or what?
Well, I think they're changing people in Washington, but we have people who are answering the phone and all being in New York City, and I think in this region we can be leaders for the rest of the country, developing policies based on practices which can be adopted nationally.
Okay, Tony, we're going to leave it there, but great to have you stop by again.
Pleasure.
Hope you make it out of the snowstorm.
I look forward to that.
Tony Malkin of Malkin Properties.